Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's trying to be more exciting than it actually is. This time around we're tackling Carlyle AlpInvest Private Markets Fund. Prepare for a tale of private equity, funds within funds, and financial jargon. It's going to be a wild ride. Before we jump in, if you're into understanding the behind the scenes of corporate finance, hit that subscribe button. We also have a Discord channel. The invite link is in the video description. Come join us. Scroll as filed with Securities and Exchange Commission 2020-2025. Scroll to first, we're looking at an amended filing, which basically means they're making changes to something they already submitted to the SEC. This particular filing is a post-effective amendment before a fate of an amendment no 4 relating to their Class X common shares. So what are they changing, or what is added in Class X? Scroll include the registrant's Class X common shares. It's a beneficial interest scroll for big news. They're including Class X common shares in the offering. That's a new share class, which of course gets its own features. They're also tweaking the prospectus, statement of additional information, that kind of stuff. Next, the approximate start date for offering these shares to the public is as soon as practicable, which is code for we're ready to go as soon as paperwork clears. Also, they are planning to offer securities continuously, which makes this what's called a delayed or continuous offering. This filing will become effective on June 21, 2025. They're registering as a registered closed-end fund, meaning that it's a registered company that is not continuously offering shares, unlike mutual funds where people contribute and withdraw on a more frequent basis. This fund, Carlyle AlpInvest Private Markets Fund, seeks long-term capital appreciation through a global portfolio of private markets investments. Sounds fancy, right? Private markets investments usually mean things like private equity or debt instruments that aren't traded on public exchanges. There are several classes of shares here with different sales loads. Class A and Class X shares could include up to a 3% sales load, and Class W shares have a 2% sales load. It's also important to mention that Class X requires a minimum investment of $5 million, while the other classes require much lower minimums. As a quick comparison, at a high level, there's Class A, Class W, Class I, and now Class X, all with different expenses as well. The max sales load vary between none, 2%, and 3% depending on which class you're buying. The distribution fees also vary. It pays to understand those differences in expenses since different shareholders will bear different levels of the overall pie. Under normal conditions, at least 80% of the fund's assets will be wrapped up in private markets, direct investments, secondary purchases, subscriptions in third-party funds, private loans, the whole 9 yards. They will also invest outside the US if the opportunity arises. And as is par for the course, they will invest in broadly syndicated term loans and other fixed income investments so they have easier access to ready cash and liquidity. These private market assets will go to wholly owned subsidiaries, each having the same investment goals as the parent fund. These structures will allow the fund to qualify as a regulated investment company for tax reasons. All these subsidiaries will be managed by the same company. One potential downside they mentioned is utilizing or planning to utilize a credit facility to obtain leverage. They mentioned they have a $225 million line with interest rates running at that secured overnight financing rate plus 2.9% and a commitment fee. Leverage is a double-edged sword. While it may increase investor returns in good times, it also stands to magnify any losses if things go south. The fund's leveraging strategy will be capped such that immediate leverage will not exceed 300% in the event leverage is obtained solely through debt. Okay, jumping over to the fees and expenses part. It is very important to look at these numbers closely and make sure to make your own decisions and not be swayed by any company's marketing. These are your hard-earned dollars at risk. A potential maximum sales load of 3% for Class A and X shares could take a reasonable size chunk out of your initial investment if you're not careful here. The other annual fund expenses are estimated to be as high as 3.01% of the assets. That and the incentive fee is something to definitely watch out for. This will most likely eat away at your returns. They estimate 0.57% in acquired fine fees and expenses. The expenses borne from investing in other funds or businesses. This effectively creates a layer of fees that the investor may not see at first glance. Additionally, the fund may have large cash positions in anticipation of funding capital calls. As a result, the fund will not fully contribute all funds at the start. A large cash position can have an overall negative impact on performance. You should not treat this report as financial advice. They are not telling you to invest or giving any advice. Always consult with a financial advisor and make your own decisions. Unlike many closed-end funds, the shares will not be listed on any securities exchange. An investment in the fund, unlike an investment in a typical closed-end fund, is not a liquid investment, and there should be the knowledge that investors will not have access to the funds for an indefinite period of time to make decisions accordingly. Since these are private market assets, there is also valuation risk, which means that the true price can fluctuate, so they may not be able to accurately value. Because of this, the fund's net asset value for financial reporting purposes may differ from the net asset value used to process subscription and repurchase transactions as of the same date. Scroll if the fund is invested in an underlying fund that is itself a fund of funds you're getting hit, with 3 layers of fees, so consider that. The amount of distributions that the fund may pay, if any, is uncertain, and it may reduce the amount of capital available to the fund for investment. What's more, it may pay distributions in significant part from sources that may not be available in the future, such as borrowings. So Scroll may not be available in the future, such as borrowings. So year ended March 31, 2025 Scroll C. Now to the financial highlights to get a look at the fund's historical performance. The fund's net asset value at the beginning of last year was $11.10 and ended at $14.46. They did have a net investment loss of $0.13 cut, NO2 and Falvings for a total income from investment operations of $2.50 with a net unrealized gain in their holdings for a total income from investment operations of $2.59. The long name aside, the ratio of expenses to average net assets attributable to common shares shows one of the biggest hit here at 4.1 per Tajikan Depolton 13 for any good. Scroller Fund is a non-diversified closed-end investment company with limited operating history. The fund is a pretty new player and is a non-diversified closed-end investment company. Keep in mind, diversification is the tactic that is employed to smooth out returns. Therefore, to balance the risk versus returns, it might be safer to just invest in an S&P. You should consult with your own professional advisors as to the legal, tax, financial, or other matters relevant to the suitability of an investment in the fund before making a decision. Alright, enough of that report. Carlyle AlpInvest Private Markets Fund seems keen on making private equity investments accessible, but it is truly accessible. The high minimum for Class X sure seems to indicate otherwise. The layered fees, while thoroughly explained, could still shock the average investor. Also, the illiquidity of this investment is a major concern for me. Is an investor truly prepared to lock their money up indefinitely? The 21% last year returns are great, but can this strategy be sustainable? That will be hard to tell. With the added leverage to play with that number can get both scary high. My conclusion is be very cautious with this fund. If you don't know all the terms and implications, take this to your advisor. Anyway, that was our financial breakdown today. Let me know your thoughts with a comment below. If you enjoyed this insight into corporate disclosures, hit that like button and be sure to subscribe. It really helps. And don't forget to come join our Discord community, link in the description. Thanks for watching. See you next time.